So back to our Cynthia example. So the Cynthia has also gathered additional information to aid in her decision, such as the reduction resale value per mile driven, round trip train fare, benefits of relaxing on train trip, cost of putting dog in a kennel while gone, benefit of having car in New York, hassle of parking car in New York, per day cost of parking car in a New York. Some data is missing, which means these are the benefits we cannot convert it into numbers, right? Some are measured and some can't. So the question arises, which costs and benefits are relevant in Cynthia's decision? So the cost of car is a sunk cost and is not relevant to the current situation. Agree? How? Car and train. So does the question say that she need to go to the New York, she will buy a car? She don't have the car right now. She already have the car. In that case, the cost of the car is sunk cost, because in either cases, whether she choose train or car is her personal property. She already bought the car. So in that case, it is not relevant. And the annual cost of insurance is not relevant as well. In either cases, train or car, she already paid the insurance at the start of the year. So this cost is also not relevant, right? So, however, the cost of gasoline is clearly relevant because she can avoid it by traveling through the train, right? If she takes the train, the cost would be incurred, so it varies depending on the decision as well. Let's move. So the cost of maintenance and repairs is relevant because it is given on per mile basis. If you are not driving car, you are going through train, you can save those maintenance costs. So in the long run, these costs depends upon miles driven. So the monthly school parking fees is not relevant. Whether you go to the New York or not, you still have to pay school parking fees, which is $45 a month. If she decided to go, she even cannot save that $45 a month, so that is not relevant. So at this point, we can see that some of the average cost of part, total average cost of the car, $0.619 per mile, are relevant and others are not, which we discussed in our earlier slides. And now some other cost. So the decline in resale value due to additional miles are also relevant, because if you are not driving the car, you can save the miles and you can also avoid this decline in resale. So the round trip train fare is also clearly relevant because you can avoid it by choosing a car option. And also relaxing on the train is also relevant, even though it is difficult to assign the dollar value of the benefit. If you are given the dollar value, it is relevant as well. And also whether you are given or not, you will add it and you will say that it's like cannot be calculated in dollar value term. And the next one is the kennel cost of putting her pet is not relevant because Cynthia will incur the cost if she drives or takes the train. In either cases, she cannot take her pet with herself. In either case, she has to pay the kennel cost, and that cost is, you can say that, are not differential cost, that do not differ between the alternative, and that is, we call this unavoidable cost, and unavoidable costs are always not relevant in any decision making. Correct? Let's move. So the next part, the cost of parking in a New York is relevant because it can be avoided if she takes a train, right? Similarly, the benefits of having a car in New York and the problem of finding parking space are both relevant but are difficult to assign a dollar amount. So clearly she can, save the hustle and bustle of finding the parking space if she travels through train. These are relevant costs. So we have successfully completed our step one of, uh, clearing out the categories, which cost is relevant, which cost is not relevant. And now we are towards our step two, which is now we base our decision. So we just put it down our relevant cost. So from the financial standpoint here, Cynthia would be better off taking the train to visit her friend. Some of the non-financial factors may influence her final decision. If we allow the dollar value to those, we can't calculate right now. So how we did that? So we know that there's 460 kilometers and per mile is 0.10. Answer is 46. Maintenance per mile is around about $29.9. Reduction in sales value, total mile will be 460 multiplied by 0.026, 11.96. Parking fees 2 days is 25 per day, which means 50 for the 2 days trip. So total round trip gonna be 137.86, whereas you can get the round ticket $104, right? So some of you can say that she needs to take taxi, if she get up from train station, where she can eat, it's and where she can relax. The benefits of having the personal conveyance is way more. The problem is that we are just giving only this data. So that's why we talk about that in the absence of the non-financial factor. If those are present, then this may influence her decision making, right? So we are just basing that our analysis that she should choose train is because we are just giving the data, not more than that. So you just need to think within the limits of data provided, right? So that was a very basic example. So let's apply the example in our industries, in our companies. So assume that the following information for a company here, which is considering a new labor saving machine that rents 3000 per day. Data about the company's annual sales and cost with and without the new machines are, so we have given a contribution margin income statement in which we have sale less total variable cost less total fixed cost. We have net operating income. So this is the current situation. This is the situation with new machine, right? So you say that sales are not affected. So these are not differential costs. So that's why these are not relevant. Direct materials is same. Direct labor. So direct labor is also because when you are using a machine, you will save a labor as well. So the differential of the labor is why this is positive because this is a cost. You save that cost. Save that cost means it is increase in profit. And variable overhead is the same, so it's not relevant. So total variable expenses, you just add those. Answer is 120,000, 105,000. Contribution margin has increased. Okay, you can see the 15,000 with the 15,000 as well. Or you can see that these are the difference in the two options. So here is 15,000 as well. So less fixed expenses other are like this, but you have to pay machine rent as well, which is 3,000. So in that case, this is a negative amount. How? Because it is going out from your pocket. So the total fixed expenses are going to be increased by 3,000. And look at the saving. The cost is going to be saved 15,000 at the expense of 3,000. So our net operating income will be increased by 12,000. Right? This is how you do the analysis using relevant costing. So another way is to do that like we just did that, just focusing on the differential here. So net advantage is that the saving is 15,000 and the fixed rent of the machine going to be 3,000. So our net saving will be 12,000 and that saving will be added to net operating income.